So we're going to start with some stats. So right now, the number one thing that you need to look at is mortgage delinquencies. Okay. So right now, the change in delinquency rate, these stats are coming from Black Knight website. I love that website, especially they track everything that has to do with mortgages. Okay. So the change in delinquency rate has gone down. So these are people that are past due as of last June, July, okay? And then the serious delinquencies, this is where you need to look at 20% increase. So these are the people who are behind over 90 days, okay? Now the next stat is an increase of 2.8% in prepayment rate. So what that means is people who were in distress, but they've been able to refinance the property, okay? Now, what we're gonna need to understand before we move on to the next slide is what's happening right now to property prices, what's happening to sellers and buyers. So property prices are holding high, steady. Why? Because there's a shortage of inventory throughout the United States. In fact, it's been the lowest ever recorded throughout the nation. There are 3 million properties available for sale. That's only 3 months of worth of inventory. So what it means is that in 3 months, assuming no new listings coming to the market, the entire inventory for sale is going to be gone. That's what's holding prices high right now. Now, what's happening to buyers? Right now, interest rates are historically low. Therefore, more buyers are coming into the market because they can afford to buy more, okay? And due to low interest rates, people are refinancing their homes to get a better term on their loan. That is why refinances have gone through the roof in the last 6 months. Okay, so right now, if you have a lot of equity, right now is the time to refinance, do cash outs, because interest rates are historically low. Now, what does that mean for sellers? Right now, it's a seller's market. If you have a listing, you're gonna make money. Okay, if you are trying to sell your property right now, if you have something to sell right now, guess what? You're gonna be making money. Because again, the shortage of inventory. Even the bad properties are selling over asking price. You see properties getting multiple offers, okay? But that's just gonna change next year, and I'm gonna tell you why. Look at this article. So we're gonna be looking at several aspects of the entire real estate market. Eviction crisis. There's an estimated in the United States 30 to 40 million people in America are at risk. Right now, there's a moratorium on evictions until the end of the year. But imagine as of next year, I'm going to tell you what's going to happen starting next year. They're going to open up the courts, okay? And the minute they open up or they remove the moratorium on evictions, that means that landlords are going to be allowed to file evictions. So what's going to happen is these people need to relocate. They're going to be dismissed one way or another, right? So there's going to be still a huge demand for rental properties. And not only that, but what's going to happen to the already people who are behind the mortgages, right? So the filings for pre-foreclosures when the courts open up next year, it's just going to go through the roof, right? Those delinquencies, people over 90 days late, are going to go through the roof. And right now, there are 4 million people in the United States that are in forbearance. Forbearance, it's part of the CARES Act, which allows owners who are in financial distress to skip mortgage payments for up to 1 year. So coronavirus started last March. So guess what? Next March 2021, that's when forbearance is over. So if those people are not able to come current with 12 months worth of mortgages, guess what? They're gonna enter foreclosure. And the problem is that right now, unemployment is historically high, 25% unemployment in the United States. So that's what's causing a huge number of evictions, a huge number of increase in mortgages delinquencies. Okay, so this is just a bubble that is going to burst next year, starting in the spring. So what's going to happen when all these foreclosure filings start to happen in the court system? What's going to happen to the evictions when they start to happen in the court system, right? So there's going to be an increase in inventory. So what happens when we end up with more inventory next year? Property prices are going to correct. So there's an estimate that property prices are going to drop between 10 up to 20%, okay, in the next 6 up to 18 months. Okay, there's going to be price correction. Why? Because supply and demand. So you're going to have the demand for inventory is still very high, but you're going to have an increase in inventory. Therefore, prices are going to correct next year. Okay, now check this article. This article was written 2 years ago. United States needs 4.6 million new apartments by 2030. Obviously, we've not come close to this. So this is putting a huge pressure on rental shortages. Okay, people are in need of rentals. And think about this. What has happened right now with the migration patterns in the last 6 months? Remember the riots downtown. So what's happening is that people are moving from the city to the suburbs, right? So people are either moving with their parents if they're lucky enough, or they're just buying properties in the suburbs. So what's happening is that the properties downtown are being empty. So vacancy rates in the cities throughout the United States have more than doubled. Okay, so what does that mean? What it means for you, let me give you this screenshot of 2008. I just want to show you this snapshot. This was household occupancy rates back in 2008. So everyone was given a loan, right? That caused the burst of the bubble. So that what happened was that those people, over 10 million people, had to be dismissed from their homes. So they went into foreclosure. They went where? Into the rental market. Okay. So what happened then to the rental market back in 2008 when property prices just plummeted, right? There was a huge price correction. Property prices even dropped 50%. So what happened to rents back then? Because those people who could not afford their mortgage and they were in foreclosure, they had to move to the rental market. So rents were already stable. So with that many increase in demand for rentals, rental prices just went through the roof and they're being very stable. So it's exactly what's going to happen next year. Next year, when you see this huge number of filings for foreclosure and then a tremendous amount of evictions, right? Because people don't have a job, right? Over 25% unemployment. So they can either not pay their mortgage or the rent. It's going to affect the real estate market, especially for the mortgage delinquency. So what's going to happen is that most of those people need to be in the rental market. So rentals are going to be the place to be. So if you're thinking, well, what should I do? Should I flip? Should I rent? Should I wholesale? By far, rentals are the place to be. In fact, we just put a property for rent this week. We've been getting so many applications that it's just insane. So many showings, it's just crazy. Okay, so the place to be is going to be in rentals, especially next year. And then, so as I mentioned earlier, property prices back in July skyrocketed 24%. Okay, again, that's because of the shortage of inventory and interest rates being so low. And interest rates are going to increase next year. Okay, so the interest rates were so low pretty much to fuel demand because people were scared with coronavirus. So what the government is trying to do by lowering the interest rates is encourage people to spend. Okay, that will just fuel the economy. Um, so what's happening is that property prices are not going to change anytime soon this year because of elections, right? And then the holidays. So nothing is going to happen. Plus, the court system, as far as pre-foreclosure filings and eviction filings, are not allowed. 2020, period. Things are going to kick in next year. So you have to be ready for that. And something that backs up what I was just showing with the unemployment. We're in a recession already, and 11.5 million jobs deficit remains. So what it means is that for the 20 million people that are unemployed in the United States, 40% of them will never be able to go back to their previous job. Okay, those jobs have been closed forever. So that's something that you need to keep in mind. Look at this. This is from Yelp. 55% of businesses have closed. So Yelp doesn't have any skin on the game, right? So they just report reviews on businesses. And this is due to coronavirus. Imagine small, medium businesses have closed. So this is what's fueling the economy. These are real people making money, but they're unable to pay rent, mortgages. So this is what's been happening this year, but we have not really seen this because of the stimulus, the CARES Act, right? The $1,200, $1,700 that people were able to get, in their mail. That's all going to change next year because that's all going to be over, including the forbearance program that will end next March 2021. So let's just recap what we just talked about, because I want to make sure that you have a good understanding of what you need to do today. And property prices are still very high. They will continue to be high for the next 6 to 8 months, okay, until the forbearance starts to kick in next year when it ends. That's what I meant. So property prices high, interest rates are still very low, which is causing a lot more buys in the market. Sellers, if they have a property to sell, they're going to be making money right now. But be careful, because if you're thinking about doing a flip, they're going to be declining values in the upcoming 10 months, okay? In the next 6 to 10 months, you're going to start to see the decline in property prices. It's not going to be huge. They estimate no more than 20% price correction on property values. But still, you might be thinking, should I flip? Should I wholesale? Should I buy and hold? Okay, if you're thinking about doing flips, be just very cautious. You need to get a great deal with enough spread so that you account for the declining value in the upcoming months, okay? That's just a requirement. You need to understand your numbers. You need to have at least $100,000 spread from the purchase price you buy it to what the ARV or after repair value of the property is, and your rehab shouldn't be more than 40. So stay away from gold rehabs, okay? Another thing that to keep in mind, right now is the time to buy. Through the fall, winter is when you need to buy properties. Why? For two reasons. You have less competition, and you're going to be able to buy properties for better prices, because in the winter you will only have serious buyers. But really, nobody wants to move in the winter, okay? Because in the spring through the summer, that's when people are moving, right? Due to school, better weather, and so forth. So you're going to be buying properties at a higher price during the spring and summertime. So right now is the time to buy and rehab properties if you're thinking about doing flips. But please be very cautious, because again, flips, you're running on the treadmill. You're not building wealth, because when you flip a property, you're getting a big paycheck. That's going to trigger a tax event. So you're going to be paying taxes on the net gain. And again, you need to find another deal, and you need to do this all over again. But that's okay if you need to raise capital, right, for rentals. So understand your numbers when you do flips. Wholesaling, by far, it's going to explode because of the distressed, motivated sellers that cannot stay in their homes. you are the solution. If you're gonna be doing wholesales, you're gonna find a great number of distressed sellers that you can help keep the properties or buy the properties from them at a great price. Okay. Now, rentals is going to be the right place to be for the upcoming 2 to 3 years. Why? Because rentals are going to become super strong in the next years. Why? Because the people that are being displaced from their homes, that are being evicted, they still need a place to live. So where do they need to go? In the rental pool. So if you own rentals, guess what? You're going to be in good shape. Obviously, you need to understand your numbers. You still need to get a great deal. But what I love about rentals is that they're less riskier than flips, because even if you pay a little bit more for the property, you still have some cushion to recoup down the road. Not only that, but the rehab doesn't need to be perfect, and it's not going to be as expensive as for the flip. When you do the flip, you really need to get things right and beautiful. When you do the rental, it doesn't need to be that beautiful of a rehab. Okay, it just needs to be what the neighborhood requests. Okay, so typically that's just medium to good rehab. So rentals, it's just the safer place to be. Now, something that you also need to pay attention, based on what I told you earlier, migration patterns. People are moving to the suburbs from the cities. So you need to look at population growth in the different markets that you want to invest. Okay, you want to be in places where people are moving into, right? Population growth is increasing. Why? Because you're going to be able to sell your property quicker. You're going to be able to rent your property fast. You're going to be able to command top dollars for either the sale or the rental. Super, super important. You do not want to go into depressed, distressed areas, because you're not going to get collectible tenants. You're not going to collect top dollars for your flips. In fact, you're going to end up with vacancies, and you might sit on the property for many, many months. So be very careful about population growth. I'm going to show you where to find population growth in ChicagoDealVault. Something that you also need to pay attention to, based on the issues with businesses, downsizing, closing, layoffs, before you invest in the area, you need to understand if there's a big company doing layoffs, right? Because when that happens, your property is going to be affected immediately, okay? Like, for instance, when a Navy or a military base moves or relocates from a city, that city gets just slammed big time economically. So that's something that you really need to pay attention. What's happening with employment in that area? Okay, super, super important. And it could be the other way around, right? If Amazon is setting up a big warehouse, like in Moni, they just set up a huge warehouse in Moni. So property prices are going to go up, rental prices will go up. So employment is what drives property prices and the rental market. People will migrate where the jobs are, especially right now with a super historically high unemployment rate of 25%. Okay, so let me go ahead and show you what you need to focus on very quickly when you are analyzing a property. So number one, you need to understand the market, that it supports your exit strategy, whether it's a flip or it's a rental. So I'm going to show you, I'm going to go into area reports. I'm going to randomly pick one of them right here, Buffalo Grove, just for sakes. It's the third one. So Buffalo Grove, it's a very good area. So let me just scroll down to where you need to look for the population growth, okay? So right here we have population growth. It's negative 3.2, so it's, I would say, fairly stable. And we're updating these every month, okay? So these are changing constantly. This is a great neighborhood, Buffalo Grove. And then obviously you need to understand, down below, we give you a summary of the exit strategy that makes sense for this place. Buffalo Grove, it's a great place for flips. And my assumption is that since Buffalo Grove is an A area, it's a very nice, desirable area, that it's a flipping market for condos, duplexes, townhouses. Let's just verify that. And indeed, let me show you the sales market analysis for condos. It's the middle column. Number of flips 139. And you know why? Because of this, the months of market supply. So there's a shortage of townhomes, duplexes, condos in Buffalo Grove. It's a very desirable area, but it is also very expensive because look, the sweet spot to buy a condo or a townhome is less than 200,000 versus a single family home is over 350,000. Does that make sense? People want to buy an affordable home in a very nice neighborhood. That is why it's a flipping market.
I was like, do you know? He's like,
It's a flipping market for townhomes. Super, super important, okay, to understand. Now, the second thing that you need to pay attention to is population growth. I mentioned earlier, location, 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 okay? So location of your property is going to be critical, okay? It has to be in a quiet street, away from busy roads, train tracks, airports, commercial strips, and so forth, okay? And please understand your numbers. Whether you do a flip or a rental, my suggestion is, even if you're gonna do a rental, aim to pay the flip price. So what does that mean? In ChicagoDealVault, we're gonna give you, let me just pull up a random property from pre-foreclosure. We're gonna give you the ARV of the property, an estimated rehab amount right here, and then how much you need to pay for the property. As you can see, the flip max offer is 160 for this particular property. The rental is 195. So even if you're gonna do a rental, try to pay the flip price. Okay, that's just a tip of advice. But again, I would like to recap everything that we talked about so that you fully understand what's happening right now. Huge number of evictions, huge number of mortgage delinquencies. Okay, right now, over 4 million people are in forbearance. Forbearance is gonna end next March. So as of next March, courts are gonna be open. So you're gonna see a huge wave of foreclosure filings and also evictions. Those people are gonna need to be placed somewhere. They will go into the rental market. So can you imagine what that's going to do to your rentals? Your rents are still going to continue to go up. And obviously with rentals, that's the way to build wealth in real estate. Second of all, the shortage of properties for rent. That's what's still keeping high rents, because this came from 2008. All 10 million people that got into the rental market put a huge pressure on units available for rent. And again, this is what's going to happen when a lot of people have lost their property. They move to the rental market, and that's what exactly happened in 2008. Property prices will continue to be high up until early next year. Keep that in mind. But early next summer, property prices will correct themselves up to a 20% drop in the next 2 to 3 years. Okay, so be aware if you're thinking about doing a flip with the decreasing ARV values. Okay, and then unemployment is still very, very high. This is what's hurting the economy and the real estate market the most. This is what's fueling evictions and mortgage delinquencies, unemployment. Unfortunately, 40% of people laid off won't be able to go back to their jobs. So you're going to be focusing on primarily B markets and A markets, okay? Because those people are working remotely from home, okay? The C and D markets, which are the more challenging and distressed markets, have been hit the hardest. Why? Because guess what? They don't get to work from home. They lost their job, and 40% of them won't be able to get back to their previous job. So keep that in mind. If you're thinking about rentals or flips, please focus on B markets, bread and butter, or A markets, but A minus markets, not the very expensive markets, because the numbers are not going to work. you need to focus on the B minus, B plus, and A minus markets. Those are the three markets that you need to focus on. And in Chicago Deal Vault, we show you what those are. Okay, so you can filter the markets by categories. So market type, we have A, B, C, D. So remember, you've got to focus on B markets, primarily the bread and butter. So here we're going to tell you what those are. So whether you do a flip or a rental, please try to stay away for sure from these very distressed areas, okay, where the migration patterns show that the population growth might be negative, meaning people are moving away. Why? Because employment sources have depleted, maybe big layoffs. So these neighborhoods in the areas, depressed neighborhoods, have been affected the most. That is why you've got to focus on the better neighborhoods, the B, the A, the more expensive, the more desirable, where employment is still great and overall crime, schools are better, okay? Because you're gonna be able to command better rents, be able to sell your flips for top dollars.